Okay, welcome everyone. We'll start our lesson 4. Today lesson will go through LO4 learning outcome 4. In this lesson, LO4 compare the way in which the organization should use the management accounting to respond to the financial problems. So management accounting we discussed in the previous lesson is meant by internal. Management is internal and financial accounting is external. So when we discuss about the management accounting, so we look around the financial, no cash, low cash, cash credit management, receivable from the customer, try to reduce and supplier payment, creditors, and try to negotiate with the supplier is a crucial in the management accounting. What we said, management accounting is the internal. So what we need to look around, we need to be manage all our financial, non-financial performance. We will go through the balance scorecard and we'll discuss about the benchmark in this, So organization have a problem, how we can address these problems. So management can play. So management is the process of designing an environment to achieve the pre-selected objective. So as a manager, your job to be create surplus. So how you can do the surplus? You try to be reduce the inputs and you increase your output. So output should be increased. So that's, is as a manager, we try to reduce the waste. So that's really as a good manager is always looking. So here we look at the balance scorecard, which is given by Michael Portal also added the. So when we look the balance scorecard, you want to measure the performance of the company, or we have a problem in the company. Always look around the financial perspective. Yes, like you have a cash flow issues, you have a profit issues, you have a shares. Yes, so we can look around the financial perspective or the cost. Why material cost, labor cost is decreasing? Why margin is dropping? Customer perspective, always look, the customer satisfaction. What is happening? Because in the long run, if the customer satisfaction decrease, it will impact, on the company. So that's why we need to make sure we look the long-term perspective as well as short-term perspective. Other is the internal business perspective. We need to think about if we don't bring the innovation, if we don't bring all coordinated activity, we can't really achieve our organization objective of it. So that's why it's very important. Then feedback, learning and growth perspective. So we need to learn, we need to grow, but it's a continuous process. So we need to look around all these perspectives: financial, customer, internal, and learning and growth perspective innovation. Okay, so criticism of the balance scorecard. The balance scorecard has attached some criticism. It is the bias towards the shareholder and fail to give the adequate attention to the contribution of other stakeholders. So that's one criticism in this model, because it's looking at other stakeholders that were not just the. So particularly employee and supply, because it gave attention the role of employees, it failed to consider the aspect of human relation. Balance scorecards cascade down the organization with little involvement of the manager, and this leads to the employee dissatisfaction. So it does not help. The organization to define specific performance measure. That's other problem in this. So we need to make sure we address these issues, and it does not deal the strategic uncertainties. Yes, it's not really dealing with the strategic uncertainty. Thus, we need to make sure we'll address these. So what we need to do as a company, as a managers, we need to address all these issues in our organizations. Okay, guys, that's we need to make sure. Okay, next, balance scorecard translates strategy into the personal terms. Yes, so what is the balance stage? Align the organization strategy, make the strategies everyday jobs, make strategy the continuous process, and mobilize the leadership for change. So this makes the business scorecard a tool forward planning for the change, as well as of course, we can look around the retrospective views about the past performance. It It is important aspect of the balance scorecard involve the employees in all stage of setting scorecard and monitoring the outcome. It is flexible, so the balance scorecard can be designed to relevant organization and its operations procedures we need to be produced. Okay. Then another we need to look around the critical success factor in any organization. So if we have in our organization is a problem, you have to find what are the critical. So like in hotel industry, critical success factor is your customer satisfaction. Your first line staff, how well they're handling the objection and the knowledge about the product and the services they're offering. So CSF is a competitiveness, the sale growth by the product service, measure of the customer base and relative market share and the position. Resource utilization, yes, efficiency measurements of resources planned against the consumer, measurement of the resources available against the use, quality service, quality measures in each unit, yes, evaluate the suppliers on the basis of the quality, customer satisfaction, speed of response to the customer needs, informal listening by calling a certain number of customers each week, number of customer visit in the factory. So all we need to be look around in these are the critical success factors. Other we need to be look around corporate governance, how the organization govern and control is a system which the companies are directed and controlled. It governs the topics such as how the power is divided between the board and the shareholders, accountable of the board and the members, rule procedures, making decisions, and the provision of the company. And the governance provide the structure through which the company objectives are met. It means that attaining those objectives and monitoring the performance is very important. If we don't monitor the performance, that is really hard to be achieved in the long run. So the history of the corporate governance is we have a Cadbury report, Cadbury committee set by Financial Reporting Council, the London Stock Exchange, accounting. Objective have to be establish the standards, yes, level of confidence and financial reporting, audit, all this, was the key. Code of best practices been set up in 1992. Recommendation, it is the desirable to be a separate role of the chief executive. There should be a non-executive directors. Audit committee should be appointed to review the financial statements. Remuneration committee consisting wholly mainly the non-executive directors. That is the key. Okay, the combined course objective, outcome, the combined acceptable principles we need to be look around. Yes, so if we don't have those, it's hard to be achieve our organization objective effectively. So that's we need to be make sure we line all our activities, our strategies, what really we want to be achieve as. So that's how that we need to look around as a company, as a well governance. Okay, next we have a report of Turnbull, one of the the committee, and they issued a report in 1999. Okay. In 1999, according to okay, that's we need to be look around to give the additional guidance and the control and the summary. The board should forward and not just consider the past performance. Yes, that's we need to be look around. Consider the past performance. So we need to be make sure we not just focus on the past performance. Huh? Okay, according to the Higg report, that the Higg, in 2003, corporate to develop the guidance to making non-executive more effective. That's in this report, because all these report, the purpose is to improve the performance. So as a management accounting, is all about internal, but the purpose is to improve the performance. If we can't do it, we need to think about. Okay, next we're looking in here, fixed and flex budget. So where we can find the variance. So fixed we discuss about. So you will see there is adverse variance because there is activity different. We're looking 50,000 against 37,000. So there will be a difference. So according to the flex budget, we need to find the fixed cost of, okay guys, spend 2-3 minutes, just look, this we discuss in another lesson as well. Okay, so just think. So look, spend 2-3 minutes please. So we've been given, this is, if you look in the previous, we have been given the 50,000. If we look here, 1,500,000 divided by 50, we'll find the rate 30 per unit and times by the, so by the 37,500 units, and we can get the revenue. That will be the budgeted. Then we compare again the actual, and we have adverse variance because our actual sale value is lower than the budget. And same we will look around how much was the total material for 50. So cost of material, we look here is 7.5. Yes. And then we multiply with it. Yes, how many units we are producing. So we'll look around all this and we'll compare it. So you will see here, all this we calculated the cost. 37,500,000. It's 7.5 times. Yes. So we look around, it comes 28. And so on. So we'll found the difference, adverse, favorable. So that's the way we can calculate the variance. And look around the profit. What is the difference, please? Okay, guys. So that's what we need to be look around. So we'll see, in this way. So overall, we have a variance is adverse. We really our profit it went down. Okay, then we can look around the reasons for the variance. Always good, the management account and managers always identify the reason of the variance. Why is the material use variance is unfavorable. Why is unfavorable? Because they may be due to the labor was unskilled or the material was bought the low quality. We save the variance is the favorable in terms of the price. So unforeseen discount received, greater care of purchasing, change in the material quality. So these can be leads to the material favorable, and so all these are the reasons being discussed. So what we need to do, please look, 2 minutes, the reason, please make sure to read it. Does it logically make sense? Okay, that's what we need to look around. Next, we're looking the variance. We have a price variance, price increase. It can be reason of adverse variance. Yeah, it can be defective material, excess weight. It can be material usage variance. Yeah, can be theft, inflation. Yes, rules. So we can look around overall cost as well as the material have two sub variants: the material cost and the price. Same with labor rate and labor efficiency variance and total labor cost variance. That's, if overall we're reducing the cost is good. Okay, then we have an interest always, we can, if you have an investment, you think about the compounding. So if £100 is invested for 1 year at 10%, after the 1 year, it should be 110. After 2 years, it should be 121. Or, yes, we can look around 10 point power of 2, so that can be 120. So that's the way, as a managers need to be quickly calculate why this is happening. Yes, has compound, so it's a compound cost as well. So we are paying as quickly you settle your loan is better to be, because as well the company's cost will go down. As a manager, we need to be focused on it. Then is the discounting. We want to be find the real value of the money, present value of the future cash flows. 1 divided by 1 plus r power of n. Yes, what is the PV of 10,000 received 5-year times? If the 6% per annum, yes. So PV of 5 years is given. So S is times by 0.7, which is PVS. So what we can do, how much we are going to invest times by how much, actually. So if you get 100,000, that's actually you're not getting 100,000. The real value will be 74,730, because the value of the money is decreased with the passage of time. Then we have a IAR, which is called internal rate of return. Internal rate of return is a very popular approach. It should be higher than the cost of the capital. The capital which we are borrowing, and the cost should be lower than that. And internal rate of return should be higher. So this is the formula. We need two NPV, two net present values, one positive and one negative, and then we can use this formula to calculate the low discount factor and the high discount factor to their NPVs. And by using this formula, we can find the cost of. Okay, so each method, whatever we are using for appraisal the project, we need to be always think about which is fit for purpose, because there are a lot of. But what your objective? You want the shorter payback period, you get quicker your money. If you get quicker your money is always better, because you can get, you have an opportunity to reinvest in other projects, so you can earn, or you can multiply your return on your investment. Okay, then strategic business unit, SBUs. So in these are the example of strategic business unit SBUs, such as Toyota or the Ford. If you look the Ford have many models: Ford Fiesta, Ford Mondeo, Ford Focus. So each car, the brand is a separate profit center, and we calculate the separate, and we can make the separate strategy for them. Okay, just think about any other example, guys. Okay, next now we look identify market-based criteria, customer types, product, service, competitors, capability. Capability and competency is the two difference. Competence, capability is ability to do something. Like if you pass your driving test, you're capable, but still you need to display your newly passed driver plate on your car few weeks or few months. The reason is because we can make mistakes. So these days, employer looking your competency. So as in management accounting, we need to be look around how we'll become competent to use our resources, to become and use our resources effectively. So that's, the star is it's a star method of interview as well, guys. You can type on the YouTube. S stand for situation, T stand for task, A stand for action, R stand for result. So as a management, if you want to test it, so you're looking more focus on the competencies. Okay, identify the strategic business unit in a group and decide, so this activity you can do in group. We are delivering online and you can look around which SBUs. Think about Toyota. You can look around the SBUs, strategic business unit for this, and you can develop the strategies. And then we have other Porter generic strategies. Michael Porter, one of the great scholars, he wrote many books, he gave many theories. One was the cost leadership. So in management accounting and costing, we need. Okay, so cost leadership, cost focus, differentiation, and differentiation. Like Ryanair is the example of the cost leadership. Yes, Apple is example of differentiation than other mobile phone. The another strategy can be is a clock where we look around the differentiation focus, low price zone, hybrid strategy, and non-competitive strategies. So this is the clock strategies we can look around, and we can make it the strategies for various airline, and this model is being used. And so as a management accountant, always or your objective to use less input, create more output, reduce your create surplus, design the better environment, look short term and the long term perspective. So how could the business unit achieve this sustained price based advantage, operate with the lower margin, have a unique cost structure? Organizations have a capability according to the Johnson and Scholl, one other author that has mentioned. How does the strategic business unit achieve the sustainable differentiation based on advantages? Create difficulties, yes, imagination, imperfect mobility, intangible assets, switching costs, co-specialization, lower costs, all we need to be. Different strategic business unit could also sustain the strategic capabilities by creating strategic lock. So how could the strategic business unit respond to competitor? Decide an organization, you can think about the competitor threat, how the organization deal with the threats and another group, so we can identify in. And the other, we need to be, when we deal it, we can consider the hyper competition. Hyper competition mean high competition. Couple of you maybe learn about the term. It's called hyperinflation. Inflation rate is the more than 10%. Yes, that is a hyperinflation. So we need to be make sure we'll do. Other is one of three is a game. Like a game is changed. Your plans can be changed. So as a management accountant, you need to be, because end of the day you're looking the costing side. You have to look around the strategies which will effective. It can be outsourced. It can be making, yes, manufacturing in the house or not. So competitive strategy, the hyper competition make market is a constantly change. Yes, hyper competition is based on speed and initiative, not the defensive image, imitate strategic repositioning and block first mover advantages. Always we need to be. Then we have a hyper given by this author Devaney, and they can visualize base, success attacking the competitor weakness. You need to be, because you focus on the management accounting, costing, and that can be, and you look around the strategy for it. Using the competitive advantage, increase the seller power, yes, increase the buyer power, in build the barriers to entry to avoid the substitution of the product, gain entry competitive power, share work with the customer, yes, gain the leverage from the public investment. Game theory inside is a competitor interaction based on the chess, yes, move and counter move. We always look around when they do what we'll do, huh? Always looking, game theory, and we need to be chain accordingly, because don't sit it, because we have to move. So that's the game. Relevant costing, relevant cost is in the revenue. Those costs in the revenue chain are the direct result of the decision taken. So we need to be think. So guys, we need to be look around the cash flows incrementally. Approach of limiting factor. Yes, we have in any business really, we can't say we have unlimited resources. We have a limited resources, unlimited ones. So we have to find the how well we use these limiting resources. Machine hours, labor hours, unit. Yes. So we need to be always resources can be money, material, and manpower. These can be, and we have to look around contribution of each, If we'll make product A for suppose, we can contribution can be £15 per unit. Yes, contribution always selling price minus variable cost. Yes, another product give us 8. So where do you use the more your resources? You want to earn £8 or you want to earn £15? So we'll want to be earn £15. So our limited resources we use towards first. If anything left, after meeting the demand of the goods of that, then we use here. So that's the way we need to be managed. Okay, that's other way we can look around. Decision making is means selecting the best course of action. Yes, we need to be look around. Quantitative and qualitative factors always keep in consider when you make any decision, because if you don't consider, just you'll focus on the cost. So performance always equal to the time, cost, and quality. So that's is in the management accounting as well. We need to be look around 3 E's. So 3 E's is couple of you may be heard about. We always look economy, effectiveness, and efficiency. Yes, so effectiveness is the benchmark. If more than the benchmark, you're very economical. If you're exceeding in time, in cost, and quality, you're very efficient. And we need to be focused on the efficiencies as a manager, and we have to create efficiency. So that's all to the lesson was about how we can make the strategies, what basis we can, what factor we look, and how we can improve and how we can solve or respond to problems for organization have. Thanks for listening and attending, and I hope speak you all during our next lesson. Thank you. Bye bye.